Excellence, ladies and gentlemen. So last time that we were here, we completed additional information. Information number B. We completed 1, 2, 3, 4, 5, 6, and also again, yeah, just 6. We are supposed to start with 7. Now, ladies and gentlemen, let us not waste any more time and continue with 7. Ladies and gentlemen, please note that here we are looking at loan. Now, what exactly are we using this information for? We're using this information for finding out how much is our capitalized interest. Now, the information says that the loan statement received from SAAB Bank on the 28th February reflected the following. Now, what it reflects is that there's a balance at the beginning of the year, there's a repayment of the loan, and they say they're capitalized interest, and then we have a balance at the end. Please note that the balance at the end is not the same as the balance that we have for our interest. Note here for our not interest, for our loan. You see the same bank, mortgage loan, SAAB Bank. There it is. It's 103,800. But however, the balance on the statement, it says 117,300. Please take heed that it says here interest on interest on loan capitalized. So what's happening here is that, just take note of the signs that I'm about to write here. Okay, now what happens here, this is a positive. It increases our debt, this decreases our debt, this needs to add on to our debt, this is equal to our debt. So what we have here is a calculation dilemma. Therefore, the signs are going to be as follows. The signs are going to be as follows then. Since we have this here, this information here is going to turn into a negative because it's beyond the equal sign. It's actually supposed to be this positive, but because it's on the other side of our equal sign, it's going to be a negative. This one is going to be a positive. It adds. And this one is going to be a negative. And this one is going to be a positive. Now, since we've got the lines in, the signs in, let us get to understand what's happening. Now, our balance, because loan is a liability, therefore, when we have a balance, it is a positive. So it increases our liabilities. So when you do a repayment, it's a negative because it decreases our liability. Now, interest on loan capitalized, it means that we take all the interest for the year and then we put them as one lump sum interest and we add them to the loan, and that is going to add on the loan that we have. So it's adding our liability, so that's going to be a plus. So we take all these signs and then we work them as they are. So let us look at the information now. Let's work with this information first, and then after that we'll work with this information afterwards. Now, please note that the following calculation is going to be a little bit tricky, but if you pay attention, it won't be that tricky. So we are going to start by saying, all right, we're trying to find out how much is the capitalized interest. Remember that this is interest on a liability, which means it's going to be interest expense. So basically here we're calculating interest expense. We are going to calculate it here first, and then let it make sense to us, and then after that we're going to include the answer, or incorporate our answer into our statement of comprehensive income. So we're going to start with the first one. That's a positive, right? That's 450,000. Oh, sorry, not 450,000. 150,000. 150,000, right? 150,000 less the repayment. How much is the repayment? It is 46,200. Now, please note, you see this 103,800. This is the balance that we have at the end of the financial year. Please look at it. 103,800. This is the balance without the interest. So the interest is an expense. So it gets capitalized on the account but gets transferred into the nominal account section. So at this moment in time, we need to find out how much is the interest. So how do we check the interest? We look at what essentially is supposed to be our balance. we're going to subtract from it the balance that we have from the bank, because our balance in the bank and the balance in our books are supposed to be the same. So when we minus the very same amount from the balance of the bank, we are going to find out how much the bank did add on to our loan for us to have our interest. Okay, so we are going to take this negative 117,300. 117,300. Oh, sorry. Let me just do that again. I'm going back up. Please bear with me. 103,800. It's going to minus 103,800, and then is it 103,300? 103,800. Yes, it's correct. 103,800. Then we are going to have 13,500. This, ladies and gentlemen, is our loan, interest on loan. All right. So we did the calculation. Now it's time for us to write the calculation and write the calculation properly into our statement of comprehensive income. So ladies and gentlemen, we are going to come here to the statement of comprehensive income and come here to interest expense, which looks a little bit beat up. So I'm just going to rewrite that properly. Interest expense. So we are going to have firstly the 150,000. We are going to subtract the repayment. That's 4,6,200. We are also going to subtract the balance. We are also going to subtract the balance, which is going to be 117,300. Already we know what the answer is, but for now we just need to make sure that the information is written up. Remember, I said that we need to complete the book first before we start doing what? Before we put our calculations. When everything is here, when everything is done, we conclude by adding everything and seeing if everything is on point. So we are done with this transaction. Ladies and gentlemen, we go to the next transaction. The next transaction here says that provide the outstanding interest on fixed deposit. Interest is not capitalized. So here it says that we need to provide for the outstanding interest on fixed deposit. So let's go up. Do you see fixed deposit there, up there? How much does it say fixed deposit is? It says that it's 9% per annum. Do you see that, ladies and gentlemen? And you see here that interest on fixed deposit is 1,600. So how much is the outstanding for the fixed deposit? This is fairly simple, ladies and gentlemen. We come back on this side, then we write the calculations for the fixed deposit, because you already have an amount for fixed deposit, so we need to know what is the outstanding. So we're going to write here fixed deposit. How much is the amount? That is 24,000 multiplied by 9%, which is 0,09, or 9 over 100. And then how much is the answer, ladies and gentlemen? We are going to check it right now. Okay, so the answer, we're going to have 24,000 multiplied by 9 over 100, which is going to give us 2,100. This is going to give us 2,160. Here we've got 1,620, right? So this is the total that we need to write. So what is the outstanding on the fixed deposit? We'll say this minus what you already have paid for, what you already have received for fixed deposit. Just to check this calculation, because some of you might be wondering, you're doing it the other way, but you wrote something else there, you're misleading us. No, I'm not misleading you guys. So it's 24,000 multiplied by 0.09. So that is going to give us the same amount. Okay, so we're going to take that amount minus 1,620. And then the outstanding on the fixed deposit, ladies and gentlemen, is 520. So this is 540. Sorry, not 520, 540. The answer here is 540. So we are done with that. This calculation for fixed deposit. Fixed deposit. All right, we have that information. We are done with that. Provide for the fixed deposit. We are done with that. Okay. And then we look at the other transaction. It says that the bank statement for February 2023 reflected the following. Bank statement. This tells you that we're looking at bank charges. All right. So we see here EFT fees. That's a bank charge. Credit card levies. That's a bank charge. Interest on current account. Now this, ladies and gentlemen, it is a interest income, right? So we're going to have 220 on the interest income, and then we're going to have 170 plus 190 as bank charges. So here you can see it says interest on current account. Current account is favorable, so if it says interest on current account, it means that it's a favorable balance. We are gaining a little bit of interest there, so it's going to be on interest income. So we're going to take that first and add it up here on interest income plus 220. And then we're going to move a little bit up and add here. What do we need to add? Bank charges. Bank charges. Oh, bank charges is already there. Do you see that up there? My apologies. I didn't think that. I forgot that we had bank charges there. So I'm just going to erase this. Bank charges is already there. This is trading. Okay. So bank charges is going to be added with how much? With 170, and also again added with how much? With 90 rands. So we've got that. For bank charges, we are done with that. We go to the next transaction, ladies and gentlemen. The next transaction here, it says that depreciation is calculated as follows. On vehicles at 10% per annum on cost, and then on equipment at 15% per annum on diminishing balance. As I had explained this in class, now when we look at cost, when we do depreciation on costs, we use cost price, historical cost. So it's going to be cost price multiplied by depreciation rate is equals to depreciation. But when we use the diminishing balance, we are going to say carrying value. What is carrying value, ladies and gentlemen? As I explained before, carrying value is cost price minus accumulated depreciation. That is carrying value. Carrying value multiplied by depreciation rate. Okay, multiplied by the number of months, obviously. 12 over 12. Oh, goodness. Now, carrying value, we're going to say carrying value multiplied by the depreciation rate multiplied by the number of months, which is, yeah, this will give you the depreciation. I don't know what's going on with my pen this side, but yeah, this is going to give you depreciation. Same thing here. Remember here, same thing that needs to be here, multiplied by 12 months. So it's 12 over 12, which is 1. So unless you have any other months which are additional to your depreciation, then you'll have that. But you're going to use the different months here, mostly when you do note number 3. But as for now, I'm not saying that ignore it, but it's not that much. Doesn't make that much of a difference because it's still 1. Okay, but you can put it just for argument's sake. Right. So we are done with that. We know the formulas. Now let us write the calculations. The most important thing, ladies and gentlemen, it is to write your calculations. Okay. Now, the most important thing, ladies and gentlemen, it is to write the calculations. So we are going to come this side. I need to increase the screen a little bit so that I can have a little bit more space for my writing. Right. Okay, I'm going to increase the screen a bit. Okay, and I'll go back to it soon. Right. So, since the screen is a bit bigger, we're going to look at the depreciation. First of all, we need to indicate what exactly is it that we are doing. We are calculating depreciation. Now, we are going to calculate the first one. This is on vehicles, so we'll write vehicles. We already are given information on what the depreciation method is, and that is on cost. So we're simply going to look at the historical cost of the vehicle, which we'll look at up there, and then we just get 10% of it, right? So look at vehicles there. The amount that we get for vehicles, let's highlight it so that everybody can see. Here it is vehicles 280,000. So that's 10%. So we come back this side. Oh, okay, I don't know what happened there. Right. Now we come back this side and we indicate our vehicles. That's 240,000. 240,000. 24,000. Let me put another zero there. Okay, 240,000 multiplied by 10%. Now, usually if you want to take a shortcut, 10%, you just remove the last zero there, that is 24,000. Okay, so this is depreciation on vehicles. We don't have to think about accumulated depreciation because that is a balance sheet account, and we only use accumulated depreciation only if we are doing the balance sheet. Note number 3. Okay, so in the cost method, but if you use your diminishing balance method, you need to consider the accumulated depreciation of the previous year, so that you get accumulated depreciation for this year by adding the depreciation that you're going to calculate by finding out the accumulated depreciation by using the accumulated depreciation that we had last year. So we're going to start here. Now, same thing, depreciation. This time we are going to have our equipment. Now, ladies and gentlemen, we are going to use the carrying value. Open bracket, I said carrying value, it is the cost price minus the accumulated depreciation. How much is the cost price minus the accumulated depreciation? First of all, we look at the cost price of equipment. That's 130,000. 130,000. We are going to subtract from 130,000. How much are we subtracting? We are going to subtract accumulated depreciation on equipment. That's 44,600. So that's 44,600. Okay, this, ladies and gentlemen, is our carrying value, and then the answer that you get there, we are going to multiply it by the depreciation rate. How much was the depreciation rate? Let us go back to our information and check. If I'm not mistaken, it says 15%, and that's what it is. 15, and that's what it is right there, 15%. So we're going to write 15% here. That's multiplied by 15%. So let us get our carrying value first. How much is our carrying value? Let's get the calculator. Okay. Right. Now, let's get our calculator. Our calculator, we're going to say 130,000 minus 44,600. Now, this is our carrying value. How much is our carrying value, ladies and gentlemen? It is 85,400. 85,400. We are going to multiply that by the depreciation rate of how much? 15%. Now, the depreciation rate, since we have that, we have the calculation. How much is the depreciation on equipment at this moment in time? We are going to multiply this by 15 over 100. So this is going to be our depreciation, ladies and gentlemen. 12,810. This is going to be our depreciation on equipment. So how much is depreciation? Depreciation for the year is going to amount to vehicle depreciation plus equipment depreciation. So we're going to have first of all, we're going to start with the 24,000. 24,000 plus 12,810. Okay, so this information will be added to depreciation, so we are going to add depreciation right here. Depreciation. So we have 24,000 plus 12,800. 12,810. Okay, so that depreciation we are done with. And then, because this is just a single adjustment, we are done with that. It's not going to continue adding anywhere. Might as well write the answers. So it's 12,000, 18,000, 12,810 plus 24,000. This is going to give us depreciation of 36,800. Our depreciation is going to be 36,810. Okay, so we are done with that. So let us continue with the rest of our information. All right, now ladies and gentlemen, it says here, note, additional equipment with the cost of 112,000 was purchased. Oh, I did not check this. I was so much in a hurry to finish that. Sorry about that. So we are going to have this single additional equipment on its own. So that means the answer that we have here is wrong. It's not 100% wrong because we just need to add. So yeah, we just did a mistake here of forgetting this one additional information, the note. Right, so we are going to look at the calculations once more. Right, I'm going to erase this. So we need to do calculations for the new equipment. All right, so we have got equipment. So let's say that this is, oh snap, it's 810. I hope I remember 810. This is old equipment. Okay, so this is old equipment, and sorry about that. Now we need to find new equipment. So that's old equipment. Now let's do for new equipment. Now the note says that we bought equipment, it is 12,400. This equipment is 12,400. Now do we have a depreciation rate? No. So that means the cost is our carrying value for now. We're going to calculate the depreciation rate of 15%. And then we're going to calculate the number of months in which we had this equipment, the new equipment in our business. So we look at that. It was bought on December 1st, 2022. Now it's February 28, 2023. So we start counting December, January, February. So that's 3 months. So we have had this equipment in our business for how many months? 3 months. So we're going to say 3 divided by 12. So the calculation, we need to complete it. 12,400 multiplied by the depreciation rate of 15%. That's 1,860 multiplied by 3 over 12. That's 460. So some of you might be wondering, what did I just do with the depreciation rate? I'll do it the normal way. So you'll see it's going to be the same answers, 465. So we're going to say 12,400 multiplied by 15 over 100, right? 1,800, same answer. And then this amount will simply say multiplied by the number of months, which is 3 over 12 months, which is going to be 465. So ladies and gentlemen, the answer here we have is 465. So we are done calculating all depreciations. All that's left now, it is to put the depreciation on the right side, or on the right place. Now the right place here, we already wrote the depreciation. We put the depreciation of the old and the new. Okay. of the vehicles and the old equipment. Now we need to put the new equipment. So vehicles, old equipment. Now we are simply adding the new equipment. Right. The new equipment is 465. That's the depreciation of the new equipment. 465. 465. Let me just double check if it's correct. 465. 465. So, ladies and gentlemen, yeah, that's it. We are done with our transactions. Now it's time for us to do the fun part, adding. And then after that, we do complete our statement of comprehensive income. All right. Now, we are done with the question paper for now. So I'm going to make this fill up the screen. Right. I'm going to make this fill up the screen because we are done with every information that we needed to work with. Okay, now right here we're going to look at calculation brackets. I'm going to be explaining that very shortly. Now in the meantime, let us look at our zoom and zoom out. Okay, we'll be zooming out of this paper a little bit, right? And yeah, there we go, so that we can see what we're dealing with. All right, so our cost is still the same. It's still the same cost, right? And then our sales, we had to minus our debtors allowances. So we're done with that. We know that this is the calculation. We are done with this calculation. All right, so there's the calculation, debtors allowances. I'm just gonna erase this line here. I'm going to do calculations lines with a different color so that you can see what's happening as we are continuing. All right, so let us take our calculator and start working on these things. Okay, so we are going to start with our sales. Our sales is 588,000 minus 6,800. Now, this is our revenue, ladies and gentlemen. 5,800 and 581,200. Sorry, this is 581,200. 581,200. Ooh, I do not know what happened. Why is my writing? Oh, I think I know, but yeah, I'll fix that now. Okay. I need to make this a little small, smaller. All right. It's a little bit better. Right. Now, what is the answer here? It is 581,200. So we are going to write 581,200. That's what we have. That's 581,200, and then our cost. What happened to our cost? It has not changed. We open a bracket. Okay. This is 420,000. We close the bracket. Now we need to find the answer. We come back here. So I said I'm going to increase this a little bit. I wanted it small at that time, but now it's a little bit, I needed a little bit bigger. So yeah, so this right here, it is an equating line. Remember the brackets. I'm going to put them also in a different color so that we can see what they are for. They are for subtracting. So basically we are going to have this minus that, and then we have the answer. So in this case, we're going to look at our calculator once more. Calculator on the side. I think we also need to make our screen a little bit on the side, just to, you know. Okay, increase it like this. Yeah, it's better here. It's a little bit better. It's a lot bit better. It will be better, and then we can never lose our calculator. Calculator will always be right here. Okay, so we have that, ladies and gentlemen. Now we are going to say the answer that we received minus 420,000. That is going to give us 161,200. So we come back here, we say, we write the answer, 161,200. This is going to be our gross profit. And then right here, ladies and gentlemen, we are going to look at the accounting lines. These are the calculation borders. We need to have calculation borders. So this is incomes. Everything that comes to the operating incomes will be calculated and it will equate from these borders. Do you see that? This right here is a main heading. Okay, operating income. This right here is a main heading, operating expenses. So these main headings, they have border or calculation borders. So you can see here that commission income is still the same, nothing has changed. They even wrote it there that it's not going to change. And then we come back here, we look at our information here, we see that we have got our rent income. There was a change because rent was outstanding, and then we had to calculate how much was really outstanding. So let us calculate. We have got 36,200, 36,200 plus 3,400. Now this, ladies and gentlemen, is going to give us 39,600. So this is going to be written here, 39,600. Now we add the 10,150 to this 39,600. So we are going to add 10,150. Then when we add, you see it's inside this border, this red border. This is a calculation border. Then we put this on the main heading. What is the main heading? This is the total and final answer for our operating incomes. How much is that? That is 49,750. I got a little bit excited by writing that 4 in that way, so please pardon me. Right, so that's 49,750. So profit plus income equals income. Income minus expense equals profit. Does that make sense? So let's get that into our minds. Profit plus income equals income. Therefore, that's why we have gross operating income, because we are going to take gross profit plus operating income. So we're going to take the 49,750, then we add the gross profit to it. How much is the gross profit? 161,200. So that will give us our gross operating income. How much is our gross operating income, ladies and gentlemen? It is simply 210,950. So it's 200 and I do not know what's happening with my graphics today, but yeah, fix that quickly. All right, so we have 210,950. This, ladies and gentlemen, is our gross operating income. Now we are done with our gross operating incomes. We are going down. This is operating expenses. So everything from here until the main heading of operating profit, it should be in the calculation bracket. So we are going to start here by bordering our calculation bracket. This will help you to know what you're adding, where you're adding it, and how you're adding it as you complete your statement of comprehensive income. So make sure that you align or you outline your calculation bracket as you are doing your statement of comprehensive income. All right. So before we do anything, we need to add and finalize so that this section of our columns can be filled. Right. So we are going to start here with insurance. Insurance has got calculation. Now, ladies and gentlemen, please note, if everything has calculations here, it means that you've got better marks, because here you'll have double marks, 3 marks, and all that. And then this side, you're only going to have method marks. So it's very easy for you to pass accounting. So just make sure that your calculations are visible. If your calculations are not visible, it's a different story. Okay, so we already have depreciation right here. So let's start from bottom going up. Okay, we're going to start with the depreciation. Okay, so minus this, we are going to have 24,000 plus 12,810 plus 465. Then you have got there your depreciation for the year, which is going to give you 37,272 or 75. My apologies. Right. And then we go up. Bank charges. Now, this is our bank charges, ladies and gentlemen. We've got 4,200 plus. Let's come back here and do that. CE. Okay. 4,200 plus 170 plus 90 rands. This gives you how much? It gives you 4,460. Okay, and then we continue. We have got our water and electricity. How much is our water and electricity? That's 19,100 plus 1,830. This is 19,100 plus 1,830. All right. Okay. And then we come back here to our bad debts. Remember that we said our bad debts here, it's actually 50% of what they already had to pay. So 50% was paid and the other one was written off as bad because the estate was insolvent. So what is half of 1,200? It's actually 600. So we come back here, we are going to say 4,800. This is our bad debts, 4,800 plus 600. This will give you, ladies and gentlemen, 5,400. 5,400. And then we go back to our insurance. This is one of the first activities that we did. Right, this is 12,500 minus 1,980. Okay, we have got 12,500 minus 1,980. This is going to give us 10,520. Now, ladies and gentlemen, we are done with that. So remember, I said that we need to calculate, to have everything in our calculation brackets first. So remember that this is an expense. Because it's an expense, expenses are negatives. So we make sure that in our on top of our calculation brackets, we include the subtraction brackets of accounting. So before we have our answer, that should be ready for our answer. So we're going to do our calculations now. Now we are going to calculate from here. Already we have got the 10,520. So I'm just going to simply say plus 43,500 plus 3,320. Oh, 3,320 plus 2,300 plus 5,400 plus 20,930 plus 4,460 plus 5,150 plus 1,800 plus 1,200 plus 37,275. Now, ladies and gentlemen, this is our expenses. So we come back here and then we write our gross operating expenses, which is 135,855. 855. So this, ladies and gentlemen, is our operating income. My apologies, I meant this is our gross operating expense. That is 135,855. So we are going to subtract 200. We're going to subtract this from 210,950. So I'm just going to do this vice versa. Obviously the answer is going to be negative, but in actual fact it's not actually a negative. So that's 210. Okay, 210, 950. This is going to give you operating income of 75,000. So this is going to be 75,000 and 95. Okay, so right here we have got our interest income. We had to calculate our interest income. Anything that has to do with interest income had to come to this. There is a note that we actually do get everything structured. We all know that. If you don't, we shall make some more videos in the coming series or in this coming episodes. Should I call them episodes or uploads? Yes, in the coming uploads. Now, ladies and gentlemen, gross operating income plus, gross operating profit plus income. This will give you profit for the year, but this is profit before interest expense. Okay, so we need to do our calculations now for our interest. How much is the calculations for interest? We are going to have 1,620 plus 540 plus 220. This is going to give us 2,380. Now remember, we need to always identify our accounting lines. So this is an accounting line, not a calculation border, an accounting line. So we have that, we add the two. So we are going to add this with 75,095 plus 75,095. Now, ladies and gentlemen, the answer that we get there is going to give us 77,475. Okay, and then, ladies and gentlemen, this is an expense that follows because the answer that we received is for interest before interest, is for profit before interest expense. That means interest expense will follow, and we have interest expense here. So because it's an expense, we should make sure that we get those negative brackets in check. There they are. We put them there. Never forget them. After that, you put your accounting calculation line, and then you get your accounting line. This is your accounting line. Is 2 lines at the end of your calculations, meaning that you are concluding and your calculation is proper. Okay, 2 lines like so. So now let us start calculating how much is our interest expense. Now we are going to say 15,000. Is it 15,600? Let me just double check here, because this is the amount that we took from. No, it's not 15,000, it's 150,000. Now I remember. Oh my goodness. Remember that we had to do this calculation and I messed up with my writing. Sorry about that. Let me just have this extra zero in and proper. So yeah, there we go. 150,000. Yes. Woo. There we go. We are going to have a right answer now. It's 150,000, not 15,000. That's 150,000. 150,000 minus the repayment of the loan, which was 46,200, minus the payment of the loan, which was, remember that the answer that you get here, this is the balance that you have on your balance sheet. You don't dismiss this. This is the right balance. But now you need to find out how much did the bank add as interest. So you're going to take the balance that the bank had minus the balance that you have, and then that will give you how much is the interest. Remember that. Yes. So we're going to have that, and we minus the balance that the bank has at the end, which is 117,300. This, ladies and gentlemen, gives you a whopping 13,500. 13,500. So we are going to subtract the 13,500 from, it's already a minus, so we'll just simply say plus 77475, which is 77,475. 77,475. Then we get our answer. Our answer is that we made a profit of, let me remove that, it looks like a minus, so yeah, 13,000. just need to be sure with my answers. I don't know what happened here. Okay, something is amiss. So I'm just gonna fix that now. Sorry. And my calculations, I'm not doing the calculation. So let me just come back here, go back into time and see what happens. Okay, 13,500. Right, this is where we are. And then we need to minus 77475. Okay, there we go. That makes a whole lot more sense. All right, that's supposed to be there. Let's not forget our bracket. And let's fix our 3. Remember, when you do accounting, you're not supposed to be overwriting as I am. I'm only doing this because I'm not 100% fully accustomed to this tablet. I do use it, but sometimes it slips and slides and it does things on its own. No technology sometimes. All right, so you have your answer here, which is going to give you a nice 63,975. Now, this, ladies and gentlemen, is your answer for the statement of comprehensive income. All right, ladies and gentlemen, the moment of truth. We do have here the answers to the information. Now, as I was going through the answers, I realized that I made a mistake. It's just a small mistake, and the mistake that I made, it is here on vehicles. You see here's 28,000. Now, when we look at our previous information that we have, this information that we have here, I made a mistake. I had the assumption and I made the calculation based that it was 240,000. Hence, I had this accumulated depreciation at 10% and the depreciation at 10% at 24,000. It's actually supposed to be 28,000. But other than that, everything that we have covered, it is on par. Everything that is here, it is correct. So I'm just going to put this side by side, the memorandum and the memorandum and our workings, so that you can observe and yeah, build a little bit of that confidence, eh? All right, so this needs to be zoomed out a bit. Zoomed out. All right, so it's zoomed out. So the only mistake that we had was right here on the depreciation. This amount right here, this is the only mistake that we had done. So it's supposed to be 28,000. So if you just simply add 8,000 here, everything will be on point. As you can see, the marks are going to show. Okay, let me just show you the marks. You can see there the marks. Let me put a green pen. So this right here will be your sorry about that. Let me just change the color of this pen. This is going to be, let's use this lime. Lime is better, right? Okay, so we'll be having these marks here, we'll be having these marks here, and then okay, that's my one mark anyways. This is correct, this one is correct, the information here is correct, and then the information here is correct. So the problem starts here, but everything inside here, it is correct. You can simply see and follow up. The only problem that we have encountered is this one problem here. It's just a small assumption issue, just working with small space. I could not see everything clearly, but I'll do better next time. All right, so we have that. This would have been correct, but this is actually good, so that you can see if ever you had one thing as a mistake here, for marking purpose, you're going to get a method mark. You will see here, you see this little square thing here on operating income, operating profit. You see that square there? That's called a method mark. This little square right here, this guy right here, see this guy right here, these are method marks. It shows that you understand that you had to do some calculations and all that. So you can see that our marks here, they're a little bit above. If you would minus 4,000, it would give you basically the same amount, because this is just needs 4,000 for it to say 28,000. So you minus 4,000, that will give you that. So this you'll still get correct. The calculations there are on point. You can see that calculations here are going on, calculations here are proper, calculations there are proper. So ladies and gentlemen, that is the end of our session. I hope that This actually helps us or helps you get to understand um, paper one a little bit better, especially the statement of comprehensive income. Next video, it will be our lovely and most difficult, it's actually fun, not difficult, statement of financial position. But for us to complete the statement of financial position, we are supposed to understand our notes. So I'm just going to give you a little hint on the notes. The notes are as follows. You must know them in chronological order. That is how your statement of financial position is actually structured. Note number 1 and 2 are not used for the statement of financial position. As you see them here, they are used for the statement of comprehensive income. That is interest income, that's note number 1. Interest expense, note number 2. Note number 3, it is tangible assets. Note number 4, it is inventories. Note number 5, it is trade and other receivables. Note number 6, it is cash and cash equivalent. Note number 7, it is equity or owner's equity. All right? And then note number 8, it is trade and other payables. Now, ladies and gentlemen, if you know this chronologically and you know how to do the calculations, you are at your first step of passing the statement of financial position. Thank you and have a good night. We shall continue with question number 3 very soon. Let's just see how that question is actually structured. Oh, this is the memo. Sorry about that. Let us just see. This is question number 3. It is beautiful. We'll be doing note number 7, owner's equity, and note number 9, trade and other payables. Note number 8, trade and other payables. And yeah, that is what we are required to do, and then we are doing the statement of financial position. This will be done and completed as soon as possible. Okay, thank you very much for your time, ladies and gentlemen. I hope you have a good night or a good day wherever you are. All right, bye bye.